All right, good morning, Checkmate crew. It's 30 minutes after the opening bell of the New York Stock Exchange, 10 a.m. Eastern Time on this Wednesday, February 1st, 2023. Mickey Blindside here with your market memo. Okay, so it's the first of the month, and it's FOMC. Okay. Let's take a look at S&P 500. Again, we're just in this range. We did, however, yesterday make a pretty big move. It turned out to be a decent amount, almost 2%, right? Was it almost 2%? Yeah, it was almost like 1.5 or something like that. So pretty impressive day yesterday. Let's see if it continues again with the FOMC coming up. Who knows what's going to happen? But if I see the VIX collapse, I mean, in that case, we could see a massive rally to the upside. Actually, if you actually take a look at, you remember how I told you guys that small caps was going to outperform? Well, look at that. Small cap stocks are actually already in a breakout. Okay? Small caps are breaking out. Not so much on the S&P 500, not yet. Not yet, at least. Hold on. For NASDAQ, NASDAQ also not yet. But RTY, it is. It's breaking out. And I told you guys the small cap was going to see relative strength. And how did we know? Well, it was our internal data. You know, I've been telling you guys that look at the data and don't believe all the stories that are out there. But, we've been talking about these data points for a while. Remember New York advanced decline line, the advanced decline line of the New York Stock Exchange? It kept going up. And I said, hey, as long as there's market breadth, more participation, more stocks in the New York Stock Exchange advancing over declining, that's going to be good for small cap. Okay. And lo and behold, the New York AD line actually broke out in the beginning of June. All right. Or, I'm sorry, in the beginning of January. So since the beginning of January, we've been anticipating this, and it happened. So there you go. Okay. I wished that the small caps could have made a bigger pullback so that I could have bought the dip, but it doesn't appear as I will be getting my buy the dip level. It doesn't appear I'm going to get it. I really was hoping that we could see a drawdown. I mean, I guess maybe it could happen if Powell today says something that the market doesn't like. I mean, I guess it's possible that we could get there maybe by next week or the week after. I doubt it, though. I don't think that's going to happen, but just in case, right now, here are the target rate probabilities for today. It is over 99% that he's going to do a 25 basis point rate hike. That's for this round. And then in a month, and about March 22nd, it's most likely he's going to, or at least the market is pricing in another 25 basis point rate hike for March. And then it looks like the market is pricing in just sustained interest rates, or the Fed funds rate staying at that 475, 500 basis point level until we have a chance of a rate cut at around November and December. Okay, so we shall see. All right. I think that, I've been talking about this for weeks, that yield inversion trade. People are still piling on to that. I cannot believe it. I cannot believe people are still piling into that. People are still expecting a recession this year. Okay. A lot of money is expecting for a recession this year, plus, a recession that leads to the Fed cutting interest rates at the end of the year. Okay. Here's the 10-year minus 2-year. It's still coming down. Now, the actual futures positioning, I only get access to that once a week after Friday. So over the weekend, I usually get that. So I'm not sure what, this week I'll have to confirm after the week is over. But just judging by this, judging by the 10-year minus 2-year, I mean, it looks as if more and more money is piling onto that yield inversion trade. And the yield inversion trade pretty much is longing the longer end of the maturities, like the 10-year and the 20-year treasuries. You're going long on that, but you're shorting the shorter term maturities, the 1 year and the 2 years. So right now, that's the yield inversion trade. I do think around March, April, that trade is going to blow up in people's faces, and that's when we might have a big enough pullback in the market for me to buy. Okay, so even though we missed out on this round, most likely we probably missed out on this round, I think we have some more opportunities coming up. Opportunities are always abundant. That is the mindset of the wealthy. Wealthy people always know that opportunities are abundant. Only people with poor mindsets think opportunities are scarce. Okay, so I will be patient and I will exercise some discipline and not chase this. Okay, but again, who knows, right? I mean, Papa Powell, maybe he puts the maybe he puts a smackdown with the with some, I don't know, with some hawkish talk, but I doubt that. Just from what I'm seeing, I don't think it's gonna matter. And even if it does, I mean, just looking at, again, internal data, let's just look the New York high-low line, the high-low line of the New York Stock Exchange. How many stocks are making highs versus lows for the year is still curving up, and it's hard to get the market to come down when this is pointing up. And when we have this pointed up, generally we see sustained rallies. Now, here's the thing. Is it making already a higher high already? Let's see. Let's see. Oh, it is. It actually is already now higher than, okay, so it's now made a higher high. Yeah, it has. Our New York high-low line has now made a higher high. These are negative numbers. So it went below 0 this year. And so that's why the smaller looking number is actually higher, because it's negative, right? Negative, I think the last high around here, around December, was 6,600 or something like that. And we're already at negative 6,600-ish. Negative 66, 6,700-ish. Now we're at negative 6,400. So we've already made now a higher high on the New York high-low line. Ooh, there we go now. There we go. Okay. So now we're at play. I think if the March-April pullback is big enough, that could be the Moab. Okay, that now we've got a certain time frame in mind. Okay, that could be the Moab, but again, there's a caveat to this coming up Moab. Just from the data I'm looking at, I don't think this is going to be a multi-year Moab. Okay, the difference between a multi-year Moab and a short-term Moab is that the multi-year Moab is something that you could just buy and hold forever, a short-term Moab is something that you can use leverage and get long and use a heavier position sizing, but you may want to manage risk as it goes up, and as the trade goes into your favor, you may want to take some chips off the table to realize some of those gains. Okay, so those are the difference between a shorter-term Moab and a long-term Moab. For me, I think I consider anything less than a year to be like micro time frames. So even though I say short-term Moab, it's a trade that I think is still going to be good for about, I don't know, at least 3 to 6 months. And that's what I call short-term. I know some of you guys think that's like forever, but to me, like even anything less than like 3 to 5 years, I consider that short-term. So that's my difference in my description. So the short-term Moab, I think this Moab could last about 3 to 6 months. Okay, I still believe that if we are to see a recession, it's probably going to happen at the end of 2023 and beginning of 2024. I have my reasons for that, and I've already gone over my thesis for that on the end of year episode of 2022, the last day of December in 2022. I put out my thesis for the next 2 years, and so you can go back and visit that and see what it is. I'll also put a link on here. If you click on the top right, you'll see an exclamation point. If you're watching our YouTube recording, I'll also put a link on the YouTube card as well too, so you can just check out that episode. Okay. Junk bonds ADL line, our junk bonds advanced decline line is still advancing. It's still going up. It's still in an uptrend. And again, we'll see. I mean, so now we've got a higher high in the New York high low line. We've now got a higher high situation that we've already been noticing since early January for the corporate bonds, junk bonds advanced decline line. Okay. New York Stock Exchange advanced decline line, you know, i.e. the market breadth or how many stocks are participating in this rally, that's also going up, right? We've already saw that one, right? So all of our market internal data is actually pointing up. Okay, now does that mean we don't see pullbacks? No, we can still see pullbacks, but it just means floors get respected. Those put walls are going to get respected on the S&P 500 chain. Okay, we're not going to see a situation where, you know, where we overshoot a put wall and then we have this kind of you know, gamma squeeze, so to speak, on the downside. Those are more rare when all of our liquidity internal data signals are pointing up. Okay, so we can now go a little bit with more weight on buying the dip. Okay, so hopefully we get that pullback. Now, when are we going to see that pullback? I have no idea. I have no idea when that happens. We got FOMC today. We've got earnings this week. Let's see what happens. Okay, we'll take it one day at a time. There's no need to predict the future. We're just anticipating what could happen, because if it does happen, now we've got a plan, right? Like a good chess player would. Okay, so that's the liquidity market internal data. Let's actually take a look at some of our trades. CSX, I just wanted to go over and just see what CSX looks like. It recovered yesterday, thank goodness. I'm still in those calls. Ooh, look at that. So remember how it back tested this 3073 to the upside? Maybe it's back testing this 3073 now to the downside. And if it bounces from there, that would be awesome for our trade. I'm still in that trade, guys. The CSX, the 30 calls. We're at a little bit of a profit right now. I believe we're about what is this? The middle is around 555. Okay, so we're about, like, you know, not almost break even, pretty much. A little bit of a profit, but almost just break even. All right. I'd love to see it go up to, you know, I'd like to see it get to around like 32.5, 33 zone, and there I'll sell some covered calls. Okay, I'll sell some covered calls there. All right, but it's got to get there first. All right, it's got to get there. But so far so good. So far so good. All right, so that's CSX. Dollar. If something happens to the dollar today after Papa Powell speaks, you know, that would give me an opportunity to get out of those UUP calls, you know, if the dollar bounces. I don't know if it's going to bounce or not. It doesn't look like it wants to. Again, we shall see. We shall see. If the dollar rises enough, we may see some of the metal miners pull back, although it is pulling back just a little bit. It's been pulling back for the past few days. I'd love to get $10. I'd love to get a crack at $10 again. Please give me $10. That would be so awesome. Oh my goodness. I would go in with some size with that. I'm really bullish on metals. Again, end of year thesis. It'd been November, and in December, I pretty much laid out my thesis on different sectors, industries for the year and all that. I really do invite you guys to go over those market memo episodes. I go over all of this in full detail, you know, even like how much of my portfolio weighting compared to other positions, all of that. I went over all of that in great detail, but yeah, I'm still waiting. I mean, we've been very patient on it. We've been waiting for an entry for months on this, but no pullback has been big enough. And then when we did get a pullback, it would miss our trigger by like a couple cents. I believe it was like right around here. Hold on, where was I? It was on SILJ, I think. Yeah, it was like one of these. It was like one of these days right here, and then missed it by, no, it was this one. It was this one. Yeah, this day right here, beginning of December. The low was 10.01. Yeah, 10.01, and my trigger was right at 10, and it missed it by 1 cent. 1 cent right there. The low was 10.01, but what I needed was 10. Go figure, right? That's life. That's trading. That's what happens. That's what happens when when you use limit orders and stuff, and when you're not in front of your screen. These kind of things can happen, but it is what it is. So that's the precious metal space. What else? Yeah, that's a trade that I really want to get involved with. Barrick Gold. That's another one. If Barrick Gold, it's one of those. So it's either GDX, SILJ, or Barrick Gold. Whichever gets to the value level first, that's the one that I'm going to pull the trigger on. So it's really uncertain which one I want to get into. All three of those have very, very good options markets. So let's be patient and we'll see what happens. Okay. Next, crypto. I mean, OI is still kind of low. It's still kind of low. It's 6.3 million right now. 6.3 million right now, or a billion. I'm sorry, 6.3 billion for the options open interest for Bitcoin. In Ethereum, it's around a 4.7. So we're still seeing that Bitcoin OI higher. We are seeing more block trades, not so much in Ethereum, but actually I've been noticing big block trades in Bitcoin options market. Now, today, for the last 24 hours, we're seeing even more block trades. Now we're getting into the 7-figure range, okay? So remember how we started seeing more and more 6-figure trades? Now we're starting to see 7-figure trades and more 6-figure trades. So the frequency of these block trades and then the size of these block trades are now increasing, okay? So this was a multi-leg spread right here. It looks like this is some sort of butterfly right here. No, it's not. Actually, it's not. It's they are. It looks like it's buying a call debit spread, and they sold a further dated call to pay for March. So they sold the April 28th 34,000 call, way out the money call, and they used that to pay for some of the, actually no, I'm sorry, it's a 4-leg right here. It's a 4-leg. So what's going on? What's buy, sell? So they're buying March, April. So they're buying call spreads. They're just buying. They're buying 2 sets of call spreads, one for March and one for April. 4 legs. Yeah, it's always a chore to go through these things. Deribit doesn't make it very easy for you to download data if you're not a member, and they don't let Americans become customers. So this is the only way that I can track big block trades, is by just going through this and looking at timestamps. So it's kind of a tedious task, and it's very clumsy, but that's the only access that we have here in the United States. So people are buying call spreads, and these are pretty big amounts. So it looks like the premium is around anywhere, $700,000, $800,000 per spread. So these are more bullish trades. 1, 2, 3, 4. What is this? Is there any other ones? I don't see any other. Oh, look at that. These two. It's a buy and a call, buy, call. Okay, so it looks like 23,000 strike calls on the 17th and the 10th. Those are shorter dated. I wonder if anything offsets it. What was the date on those? Those were 14/53/22, 14/53/22, 14/53/22, 14/53/22, 14/53/22. No, it doesn't look like it. I mean, but they could have still done it at a different time. They could have legged in each leg at a different time. That is possible too, but we'll see. But anyway, the point, the big takeaway though, is that we're seeing bigger block trades in more frequency, especially on Bitcoin. So I think there is a little bit of risk taking coming back. And again, it just reaffirms our thesis. We've been saying that the crypto market is really following, the risk taking follows the health of the junk bonds market. And the junk bonds market has been, it has been advancing. There's been more issues advancing than declining. We've been seeing this uptrend for a while now. And so, knowing this, in hindsight, we should have gotten more aggressive in buying the dips and raising some of our levels at which we would buy. But, shoulda, woulda, coulda, and who knows, we might be getting that pullback. So, that's what I'm patiently waiting for in the end. Any questions, comments, rude remarks, anything you guys want to see? Again, FOMC today. It happens at 2 p.m. Eastern time. Manage risk, guys. If you got some profits, maybe it's not a bad idea to take some of that. You leave a few runners if you wish. And if you don't have any positions, hey, maybe it's best to wait. I always remind you guys after FOMC, the quote-unquote real move may not happen today. It may be tomorrow. It may even happen next week on Monday, okay? So, keep that in mind. Just because what you see right after the FOMC, that may or may not be the real move, and it could always reverse in the days afterwards, okay? We've seen that time and time through where the quote-unquote real move doesn't start, as late as it can wait till as late as that Monday after that FOMC. Sometimes it takes a couple of trading days to unwind the hedges and a weekend for the market to digest, and then you see the real move. That's a possibility too. So, if again, I always say patience and discipline, right? There's a reason why I say that. So it looks like there's no questions, comments, or rude remarks. So in that case, we'll go ahead and wrap up our session of the morning market memo. Our Discord invitation link is in the video description below. Come join our Discord, be a part of our growing community. There's no sub fees, no paywalls, of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment, show us some love, baby. All right, I'm going to be back on tomorrow, Thursday, February 2nd, 2023. 30 minutes after the opening bell of the New York Stock Exchange at 10 a.m. Eastern time. I'll see you guys then. Trade safe.